news. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Romaine Bostick and Taylor Briggs.
It is 2 p.m. in New York, 7 p.m. in London, and we are live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
I'm Taylor Briggs.
And the market, it's got jitters. Stocks slump, bonds, they climb. Investors back on edge amid geopolitical tensions and ongoing inflation concerns. Now, Remainers, of course, got the latest eco data. Taylor's on the Haven trade. We've got you covered. Nissan, it's revving up EV efforts here in the US. Now, the Japanese automaker is planning 2 new battery electric models. We'll be live on the ground in Mississippi with the Nissan COO, Ashwani Gupta. And order up because restaurants are facing the heat amid Omicron, labor shortages and rising food costs. We bring you the perspective from Red Lobster CEO, that's Kelly Valade, as she leads the world's largest seafood restaurant chain. All that and so much more coming up this hour, Romaine.
All right, but we have to check on in the markets. It's been a down day pretty much all day long. Obviously, those jitters around Russia, Ukraine, and the U.S. response in between 4410 on the S&P 500. That's right around the lows of the day. We're back below that 200-day moving average on the S&P. The NASDAQ composite now down 2% on the day, and a flight to a lot of those haven assets. You're looking at spot gold at $18.97 right now. We actually did get above 1,900 an ounce at one point on the day on a spot basis here. And TLT at the bottom of your screen as people didn't start to flock back into treasuries.
Typically, we do some of that treasury economic analysis, but on days like today, we have to get right to our analysis with Sylvia Jablonski, Chief Investment Officer of Defiance ETFs, roughly $1.6 billion in assets under management. Sylvia, as you take a look at these markets today, is this the beginning of sort of a broader risk-off sentiment that you see?
Hi, Taylor. Great to see you. I think that when we look at today's markets, it's just a continuation of what we've seen in the markets over the last couple of weeks. You know, we have this volatility that's here to stay, and there are a lot of reasons for that. And markets, as we know, don't like uncertainty. We have geopolitics as the major, risk we think today. Yesterday, that felt a little bit better prior to President Biden's speech, and the market reacted both times about equally. So I think that until some of these uncertainties about the Fed being hawkish, how much and how many times, inflation, geopolitics, spending, supply chain issues are cleared up, we're going to remain in this sort of range-bound type of trading environment.
Yeah. And we should point out, the range that we're in is a pretty low range, at least relative to kind of how the market had performed after previous drawdowns over the last few years or so. We're still not far off from correction territory on the S&P, and of course, the NASDAQ indices still remain mired there. Is there any sense here, even if we don't return back to some of those pre-drawdown levels, is there any sense here that maybe the range that we're in right now is still a little bit too low valuation-wise?
Well, I think, there are a lot of differing opinions out there. You sort of hear that we're still overvalued, but, I don't believe that to be true. I think that there's a lot of proof in the earnings. If you look at the mega cap names, for example, the larger percentage, 75% or so, have outperformed what the street expectations were. We're on the top and bottom lines. A lot of these companies are remain cash heavy. They've had solid year-over-year revenue growth. They have sort of good outlook, particularly in the areas of, secular growth areas like technology, cloud, cybersecurity, consumer discretionary.
Yeah.
The retail sales number look good. I mean, there's some good news out there, which leads me to believe that we're going to have uncertainty and range-bound volatility, but perhaps not a major recession.
Okay, I like the optimism, Sylvia, but let's go pessimistic for just 1 second. There are issues out there, geopolitics, inflation, a Fed mistake. Line them up for me. What's front of mind for you?
Sure, and I think you've hit the nail on the head with all of those. I think that if the Fed were to hike, significantly more than we expect at significantly, higher amounts at a time, that would be something that would spook the market. What's really interesting about this market is that it feels like it's sort of a spot reaction to whatever news comes out. So of course it's a discounting mechanism. We look at sort of future valuations of stocks and price them in today, but it seems like we're really reacting to real-time news. So if anything, if we see inflation numbers come down, if we see the data looking better, I would think that the Fed can have a little more patience and flexibility in terms of rate hikes and QE, which would be better for the market. But, Russia, I think, just adds uncertainty to the market. I don't think that's going to be the major risk. I really think it's going to come down to inflation and the Fed here.
Is cash still trash?
Taylor, I think so. I think if you're sitting in cash right now, you're sort of just decidedly losing. And I think inflation is the real cause for that. So you're still better off in equity markets right now. I think a lot of the froth has been taken off of the top of, take Apple, Amazon, Microsoft, Alphabet, for example, that just have so many different business lines and are part of every trend we think about for the future. You have the travel revenge trade, the reopen trade. I mean, some of these names like Hilton, Marriott, Royal Caribbean are just crushing the S&P year to date. Of course, that's not indicative of the future, but given what the past has looked like, it very well might be a linear path for those types of trades. So opportunities definitely exist in the market, and I think investors are wise to jump in on days like today.
What about credit? What's your take on that, Sylvia?
Yeah, I think, you definitely have to pick your spots here. And I think for me, my focus is going to be on what I think the longer term trends will be and have sort of the highest amount of certainty. And again, for me, that will be, some of the economically sensitive sectors that were beat up, like the airlines, the hotels, the casinos, the cruise ships, things like that, and technology that's just getting absolutely beat up. And then my third play is sort of the futuristic technology, the 5G, the quantum computing, cloud, cybersecurity, AI, EV. That's really where I'm focused on. Everything else for me is sort of too uncertain to touch right now, and I want to see how that plays out with rates and inflation.
All right. Always great stuff out of you, Sylvia. Always wonderful to see you. Sylvia Jablonski, CIO of Defiance ETFs, helping us kick off the show here. We're going to pivot from that over to some news that we got a little bit earlier about Nissan Motors. The company saying that it's going to build 2 electric vehicles for the U.S. market. This is at a plant down in Mississippi. It's going to mark the Japanese automaker's biggest EV move in North America to date. Bloomberg's Ed Ludlow joining us right now from Canton, Mississippi, with the company's chief operating officer. Ed?
Yeah, thank you, Romain. Best ways to think about it is simply that they are getting paid more. It doesn't seem like it because we like to look at real wages, and especially in financial media, we love to be like, oh, let's adjust for inflation. But at the end of the day, people are seeing more in their bank accounts, more in their paychecks. And when you see that number, whether it's inflation adjusted or not, bigger than the number you used to get, you spend, right? You say, oh, well, I have 10 extra dollars. It doesn't matter what inflation is doing. I've got 10 extra dollars. I'm going to spend it. And it's that psychology that continues to feed into essentially these sales, these revenues. But the question is, how long does that continue?
To actually go in and negotiate better rates, and what other companies see as inflationary, Walmart doesn't see as inflationary. Hey, Katie, we got to talk crypto and the risk-off mood today. What are you seeing reflected in the crypto trade?
I mean, it's broadly the same thing that we saw yesterday. I mean, you look at Bitcoin right now, down over 5%, below $42,000 a coin. There's not much to say other than, I mean, basically you're looking at a leveraged bet on tech stocks right now. So we'll see where that goes. I mean, this market loves round numbers. We've talked about that before. It looks like it wasn't able to sustainably move above $45,000 a coin. Now we're much closer to 40. So, I mean, I would pencil that in as definitely a level to watch.
Talking technicals, because that's what you can talk about when it's Bitcoin, right?
There's not much else to go on, so.
Yeah.
What else you got, Creed?
I've got plenty. Are you guys ready to dive in? I still think, I mean, listen, I'm always going to say oil is the story. Always, always, always. And here's why. We keep talking about oil prices getting higher and higher to $100 a barrel. But hey, check this out. Brent is back down to 92, a 92 handle. And really, it's not just about Russia risk, even though that's kind of what's driving the bond market, the stock market, arguably cryptocurrencies, if you want to find a macro trade in there as well. But for oil, you're also looking at Iran. So it's not the only geopolitical crisis going on in the world right now. There's a lot on Biden's plate, and it's feeding into oil prices.
I'm just going to put it out there. I tweeted it out earlier. I'm like, if you're going to read one thing, read this column by Javier Blas and Marcus Ashworth.
So good.
While central banks got inflation so wrong, and they talk about monetary policymakers hamstringing, is that a word? Hamstringing their own efforts by misjudging commodity markets. But it really gets into like the cues, right, that are out there, and it's there aren't clear cues right now for really figuring out where inflation is or where it goes.
Sounds like a pickle.
My favorite part of that column, if I can just quickly say, is that it talked about how they're forecasting based off forward curves, but forward curves change all the time, and it's wild. And highly recommend. I can't say enough good things about that story.
It's so smart, and I think it explains why we are in the pickle that we are today. All right, Katie and Creedy, thank you so much.
Well, let's head to Washington, D.C. for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Tim, Secretary of State Antony Blinken calls this a moment of peril for Ukraine and Eastern Europe. He issued his dire assessment today during an emergency speech before the UN Security Council.
I am here today not to start a war, but to prevent one.
Blinken is calling on Russia to withdraw its troops and for negotiations to continue with the Kremlin. He is proposing a meeting with Russian Foreign Minister Sergei Lavrov next week. Blinken also told the UN Security Council that Russia will likely manufacture a pretext for an attack. Russian officials continue to deny plans to invade Ukraine and calls U.S. warnings hysteria. U.S. inflation is the highest we've seen in 40 years, but when you look at what we're getting for our money, the rate might actually be even higher. Bloomberg's Amy Morris explains.
We are paying more for worse stuff. The quarterly American Customer Satisfaction Index, which measures how happy consumers are with the goods and services they pay for, finds a 5.2% drop in quality since 2018, mostly during the pandemic. The ACSI report finds the greatest drop-off in satisfaction is with electronics and video streaming and at hotels. The problem is amplified by supply issues and labor shortages. In Washington, I'm Amy Morris, Bloomberg Radio.
Anna Sharapova won a stunning gold medal in women's figure skating at the Beijing Games today, while Russian teammate Kamila Valieva tumbled all the way out of the medals after a mistake-filled performance in the long program. Valieva has been at the center of a doping dispute. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. A lot going on this Thursday. Hey, one of the stories popped up early on our radar. It is among the most read on the Bloomberg. Has to do with BNP Paribas, their staff, and a monitoring tool that I guess they ultimately used, it seems, to spy on a boss's bonus.
Yeah, this is a really interesting story by our own Harry Wilson and Jonathan Browning. So it starts in early 2019. So you have to go back to then. The compliance staff at BNP Paribas were handed a powerful new tool. This tool, Carol, it was designed to help them police a massive trading division that handled billions of euros of transactions each day.
Called Red Owl, it was monitoring software that let frontline supervisors basically search through thousands of employees' emails and documents to suss out any wrongdoing. This is part of really compliance that has come off of, some years of concerns and new regulatory oversight. The bank soon discovered someone should have been watching the watchdogs.
Yeah, within months, BNP was conducting an internal probe into allegations that a trio of compliance staffers who were testing the application They actually used it to look up the bonus of their manager as well as spying on colleagues' shopping habits. This, according to people familiar with the situation in a document seen by Bloomberg News. Their access was terminated following the complaints about improper use of the system.
Yeah, I mean, this is part of what has been required by regulators, is that especially there's just a lot more oversight of emails that are going back and forth between things. It's necessary, but then you do wonder, this is obviously somebody tapping into it and using a monitoring tool that not intended for this, obviously.
We should note that there's been no formal disciplinary action taken by BNP Paribas against any of those involved. No evidence was found that they'd used the system to look at anyone outside of their own team or that information had left the company. One of the people said, however, the issue was investigated by the UK's Information Commissioner's Office as well as the Financial Conduct Authority, according to the people.
Right, exactly. In 2019, at the initial testing phase of a new monitoring
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World headquarters. I'm Charlie Pellet. We're just about lows of the session right now. Right to the numbers. We'll give you the why in a moment here with the S&P down 66, drop right now of 1.5%. The Dow lower by 443, down 1.3%. NASDAQ is down 293, a drop there of 2.1%. 10 years up 1930 seconds. 10-year yield 1.97%. Spot gold up 1.6%, $18.99 the ounce, while West Texas Intermediate crude is tumbling 2.4%, $91.47 a barrel. Most major groups in the S&P 500 index are lower. Giant chipmaker Nvidia tumbled after its latest forecast failed to impress investors. Nvidia shares tumbling now by 7.1%. Stocks slumping as traders seek safety in the bond market and other haven assets amid concern about geopolitical risks and the economic impacts of central bank policy. A headline to pass along from the Bloomberg Professional Service: Ukraine said to be in talks with the United States to shore up its finances. That according to Reuters. Recapping, stocks lower, 10-year yield 1.97%, S&P down 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, you're up to date on the markets. Charlie, thank you so much. So we've gone from daily COVID updates being atop the most read on the Bloomberg to Ukraine updates being at the top. And today that included a story about President Biden saying that there's a very high risk of a Russian invasion of Ukraine within the next several days. There's a lot going on. And earlier, Anne-Marie Horden, Bloomberg TV Washington correspondent, she caught up with the Ukraine ambassador to the United States, Oksana Makarova, and she talked about Ukraine's specific goals here.
We will never give up on our sovereignty. We will never give up on our territorial integrity. We will never give up on our Euro-Atlantic aspirations. But how to bring peace and how to stop the ceasefire, we are ready to discuss, because for us, again, we are prepared to defend our country, but unlike Mr. Putin, we value each of our soldiers and each of our civilians. So we would like to avert the war.
That was Ukrainian ambassador to the United States, Oksana Makarova, talking to Bloomberg News' Anne-Marie Horden. Let's get into it with Bill Ferries, national security team leader for Bloomberg News. He joins us on the phone from Washington, D.C. Bill, bring us up to speed on the latest right now, and because we're certainly seeing it play out in financial markets. We heard from Secretary of State Antony Blinken earlier in the day, as we did from President Joe Biden as well. What's the latest?
Well, the U.S. seems to be taking, I think, a much more pessimistic tone to what was probably already a pessimistic tone on the situation, saying that with President Biden saying that there may be some sort of false flag event already starting to unspool along the Ukraine border or in that eastern region, the Donbass region, that has been contested for years between separatists and the Ukrainian government. And then you had a big UN Security Council meeting that followed up with that, with Secretary Blinken kind of diverting his travel plans. He was due to head straight to Munich this morning, and he flew to New York and gave a presentation there, and made a little bit of a peace offering, saying that he had reached out to Russia's foreign minister to propose some sort of a meeting next week. Blinken will be in Europe starting this evening, I guess, and there at least through Sunday. We don't have a response from the Russian side on that. The Russians, of course, continue to say that they're undertaking military exercises, that they have no plans to invade. But the U.S. tone this morning, starting with Secretary Blinken and President Biden, was much more downbeat from what we heard earlier in the week, when there was talk about Russian troops possibly pulling back.
You know what I find baffling, Bill, is that at a time where there's incredible surveillance that we can all do of one another on so many different levels, right? Through the cyber world, through physical. I'm trying to understand, does the U.S. really have a clear handle, or do NATO allies have a clear handle on what is really going on the ground, so that they have a true understanding of what the intent is on the part of Russia?
Well, the intent is the big question. I don't think we have a sense of the intent. They certainly have very good insight into the numbers of troops, the kind of material, whether it's tanks, mortars, missiles, those kind of things that are getting moved around. And that's where they've really pushed back on the Russian narrative that they're starting to draw down as these exercises wind down. Last night we had a briefing from U.S. officials saying that, in fact, they think up to 7,000 more troops have arrived in the border region. So they see the opposite. They're saying basically the opposite of what Russia is saying. A lot of that is trackable from the intelligence agencies, but I think at the end, ultimately, you're asking a question about, what's inside Vladimir Putin's head, and I don't know that even his top aides would be able to explain that.
Well, maybe less about what's in his head, but more about what intelligence analysts think is the long-term goal of Russia here. What do they tell you? What are your sources telling you?
Well, we hear, there's a variety of things, and some of it Russia has already achieved in terms of Putin and Russia as a nation being taken far more seriously than they were, say, several years ago. Ukraine has been a thorn in the side of Russia ever since the collapse of the Soviet Union, and for Vladimir Putin in particular. If you wanted to get more mercenary about it, you could say, listen, this buildup, we did some reporting last week, this buildup has helped bring billions of dollars more into the Russian treasury through the spike in oil prices. I think our estimate was something like up to $65 billion more for Russia. So that will really help keep these troops deployed if that's part of what Putin's goal has been.
All right, forgive me, I'm not so good with my European history always. So why is it that Ukraine has been a thorn in the side of Russia since the breakup of the Soviet Union?
Well, there's a lot of, it was a part of, it was considered a part of Russia by many Russians for a long time. And it was, even, I think, frankly, there are Russians who don't agree with Putin's policies who never took the idea that Ukraine was a separate, independent nation very seriously. But more recently, Russia has definitely seen Ukraine's aspirations towards getting into NATO, towards being more closely allied with the West, as a real threat to its national security.
Who'd have thought?
Yeah.
That this is kind of the discussions we'd be having here.
Hey, Bill, just in the last 30 seconds that we have with you, talk to us about sanctions and the power that the United States and the European community actually have in 30 seconds.
Well, there are some nuclear options that the West has if the U.S. and its allies can agree. You talk about...
And we don't mean literally nuclear, although we do have that. But
like nuclear financial options, like kicking Russia out of the SWIFT financial messaging system. That would be devastating for their banking system, for instance.
Where's Putin's money? Just quickly. We don't know.
No, that's there's a lot of energy has gone into trying to figure that one out.
All right, good stuff, Bill. Thank you so much. I know it's busy on your end, so thanks for finding time for us. Bloomberg News National Security Team leader Bill Ferries on the phone in Washington. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So remember how I said at the top of our most read is an update on Ukraine, but if you try to find the virus update, I think I've got to go to like page 2.
Wow.
So it's just
what is that telling you about how people are feeling or what they're interested in right now? Or have they moved past it?
It says to me some progress.
Yeah, it does. Are we out of the woods yet?
Yeah, we're going to get our latest daily update in just a moment. First up, though, let's get an update on the markets and the trading day. Hey, Charlie Pellet.
Well, hello there. Lows of the day right now with the Dow, the S&P, NASDAQ all slumping, not just here in the U.S., but stocks have been slumping around the globe. Traders seeking safety in the bond market and other haven assets amid concern about geopolitical risks and the economic impacts of central bank policy. Right now, we've got the 10-year yield, 1.97%. Spot gold is advancing by 1.6%, $1,900 even the ounce. West Texas Intermediate crude retreating down 1.9%, $91.81 a barrel. Equity markets, though, lows of the day certainly for the S&P now down 76 points, drop there of 1.7%. We have got the Dow Jones Industrial Average dropping 508, down 1.5%. NASDAQ down 321, a drop right now of 2.8%. NASDAQ 100 index full of tech names tumbling by 2.3% on the NASDAQ 100 index. One of the other concerns for markets, the Federal Reserve and inflation. Gargi Chaudhary is head of iShares Investments at BlackRock Financial Management.
So the question I ask is, do we really think that we can get 7 rate hikes and a balance sheet sort of unwind and that not impact growth at all? Especially if we are to believe that inflation is going to come back down a little bit from these really high 7.5% type numbers to a little bit more palatable level at, call it 3.5%. Still high, but lower than 7.5%.
Palantir Technology shares lower after the data software company announced earnings that illustrated continued lack of profits despite showing an operating margin forecast to improve slightly this year. Palantir now slumping by 13.5%. DoorDash shares delivering for investors. DoorDash moving higher today after the food delivery company reported fourth quarter orders, record orders. In fact, right now DoorDash is advancing on a down day for the rest of the market by 13.2%. Among the names reporting after the closing bell today, Roku, Shake Shack, and Dropbox. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'd love a Shake Shack burger right now.
Yeah, I would too.
Right, Charlie? Yeah.
I'm thinking about that too. Chicken sandwich from Shake Shack, sure.
Okay, let's get that order in.
Watch a little Roku.
Have it during the break.
We're on Roku.
Roku too.
Right. All right, let's get to it. Let's talk about COVID, the latest pandemic headlines. The EU, European Union drug regulators, saying they will talk about Merck's antiviral pill next week. Japan rolling back some of the developed world's most stringent border measures. I do feel like we're opening.
Yeah, remember that anime convention in New York City we were talking about that was held late last year?
Yeah.
Officials and new reports are saying that it likely wasn't an Omicron super spreader event. So that's good.
All right, good to know. All right, let's get our daily check on COVID. Dr. Gigi Granville back with us, senior scholar at the Johns Hopkins Center for Health Security and associate professor in the Department of Environmental Health and Engineering at Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy. She joins us on the phone from Baltimore. Gigi, good to have you here. How are you, and what's top of mind for you and your team on this Thursday?
Well, it's great to be here, and I think I'm mostly optimistic, but we are thinking ahead to the future, and I am a little concerned that the flurry of lifting mask mandates is going to imperil in-person school. So that's my biggest worry right now.
Talk a little bit about that. Why do you think that's going to imperil in-person school? Because of parents or because of the spread of the virus?
Because my goal here is to I think that schools should not be sources of outbreaks. So I'm concerned that if schools lift the mask mandate too soon, that we will have spread in schools, and that it will it will cause children to miss out on school to get COVID and also to shut down the schools. So
Well,
that's
okay.
my biggest worry right now.
So given what we know about the spread of this in schools, and given what we know about kids between the ages of 5 and 12, and how they can get vaccinated, what do the data tell us about schools being areas of spread if kids aren't wearing masks?
Well, we do know that schools that do have masks in place have closed less often than schools that do not have masks. So it's hard to get data because all the schools are so different. But in general, the schools that have the masks in place do better. And so that's in masks, testing, vaccination, and ventilation. I mean, those are the tools that we've got.
So I can only imagine the discussions you guys have, and I know Tim and I have it, in terms of kids at schools. What's more important, having these kids at school, in school, physically with their peers, mask or no mask, or is it better to have some kids in schools with masks?
I think it's better to hold on a little bit and have the masks and stay in school. I think we all know that in-person school is really the biggest priority, and let's wait and see as these mask mandates get lifted for other places how that affects transmission.
No, but my point is it better to just have kids back in school whether they're wearing a mask or not, or is it better to just maybe have a smaller amount of kids in school but make sure they're still wearing masks?
I don't know how to answer that. I think I would rather everybody wear masks at this point, especially since we have people who are, if you have COVID, you can return to school, but you need to wear a mask after a few days. Or if you are a close contact with somebody with COVID, you need to wear a mask. Having kids and knowing how important peer pressure is, I'd rather they all wear masks so nobody's singled out and teachers don't have to think about who is supposed to be wearing a mask at this time and who cannot wear a mask.
I guess I was getting to the point of kids needing socialization so that even if
Yeah.
they don't want to wear masks,
Look.
that's more important than making sure everybody wears a mask. It's tough.
Yeah, Dr. Grunwald, my son is 3. He's never known school without a mask on. There's a mask requirement in his school. I would love for them not to have to wear masks
he
at
wears
school.
it,
He
right?
wears it. Yeah, he wears
Yeah.
it. The kids do a pretty good job. At what point would you be comfortable saying kids can take their masks off at school?
I think, right now we have more people in the hospital than we did a year ago, believe it or not. I mean, we're coming down off this Omicron surge. I think I'd feel more comfortable if we could have vaccine available for under 5, and if we could have Paxlovid in greater supply, and also vaccination rates of those K through 12, if they could be higher as well, that would be terrific. Right now, they're only at about 25 or 30%. So parents need to know that their kids are safer if they have the vaccine. And we are happy to talk to anybody who has questions about that, because it really will protect kids. And also, we worry about the future. What unpleasant surprises does COVID have for, brains and development years down the road?
Absolutely. It's not easy, none of this. Dr. Gigi Granville over at Johns Hopkins, really appreciate it.
Well, let's head to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey there, Nance.
Thanks, Tim. President Biden admits the probability of an invasion in Ukraine is still very high, but the U.S. is not giving up on diplomacy. U.S. Secretary of State Antony Blinken is proposing a meeting next week with his Russian counterpart, Sergei Lavrov. Ukraine's ambassador to the U.S., Haskana Marakova, tells Bloomberg her country knows what it's facing since it saw similar threats in 2014 when Russia moved into Crimea.
We know that the risk is there. We know that the intent to attack is there. We not only know it, we experience it for the past 8 years. Now, we cannot afford to panic.
Ambassador Marakova says Ukraine is quietly preparing for whatever may come and says the country's armed forces are very motivated and very capable. The U.S. Senate is launching a bipartisan look at conditions within the Federal Bureau of Prisons. Bloomberg's Nathan Hager with more.
Democrat John Ossoff and Republican Mike Braun are leading this new working group. Its aim will be to strengthen oversight, protect human rights, and promote transparency in America's 122 federal prisons. An Associated Press investigation found widespread corruption at the Prisons Bureau, including systemic sexual abuse at a women's facility in California, a failed response to the COVID pandemic, and dozens of escapes. Nathan Hager, Bloomberg 99.1 and 105.7 FM HD2.
Oklahoma has executed a man for his role in a quadruple slaying in 2005. 35-year-old Gilbert Ray Postel received a lethal injection this morning. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. Can I do a deep tease that this is going to be part of your decliners?
Yeah, do a deep tease.
Tesla.
Yeah,
right?
So much of my decliners and gainers that we do in the simulcast each day, Carol, well, I won't speak for your gainers, but so many of the decliners are earnings driven, and we're finally,
me too.
I finally have one because we're in the height of earnings season. We got, Roku after the bell, Redfin, Shake Shack, Dropbox, and more. Tesla, though, is down for a different reason today. It's down 4.7% for two reasons, actually. One of them has to do with the SEC.
Yeah, one has to do with the SEC. Elon Musk and Tesla telling a judge that the SEC is targeting them with, quote, unrelenting investigation for criticizing the government while failing to pay Tesla shareholders $40 million the agency collected in 2018 settlements over Musk's tweets.
Excuse me. I meant to say
You're excused.
There's three reasons, okay? The National Highway Traffic Safety Administration also opening its second defect investigation into Tesla Autopilot.
Always a lot going on when it's Tesla.
We haven't even hit the Consumer Reports one yet either.
Well, let's do that because they have gained, when Consumer Reports rank them pretty highly, right?
Yeah.
But Tesla did sink toward the bottom of Consumer Reports' newest annual auto brand rankings, weighed down by poorly received design changes and reliability problems. That made Tesla placing number 23 out of 32 brands on the 2021 list. That's down 7 spots from the year before.
The Model 3 was beaten out as the top pick for 2022 in the electric vehicle category. Guess who beat it?
Well, I know because I'm cheating.
Okay, you're looking. The Mach-E. Is
this what your dad got?
Well,
can I say that?
You can say it. That's fine.
Tim's dad.
He's ordered it. And it was supposed to have arrived, but no. I don't know if you've heard about the chip shortage.
Oh, yeah, I did.
So he's been waiting probably about 3 or 4 months.
God. That's where you really see the supply chain problems,
Yeah.
right? U.S. manufacturers are faring poorly on that list, by the way, with none ranking in the top 10. At number 11, GM's Buick was the best domestic brand, while GMC and Stellantis' Jeep took the last spots.
Hey, it shows there actually is some serious competition for Tesla.
I love this, that there are more people involved in it.
Yeah, it's great.
Not so great for Tesla. Shares down about 5%. All right.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ are all slumping at or near session lows right now. Right to the numbers. We'll give you the why in a moment here, but the S&P down 80 points right now, down 1.8%. The Dow now down 534 points, down 1.5%. NASDAQ lower by 338, a drop for the NASDAQ Composite Index right now of 2.4%. NASDAQ 100 Index, full of tech names, also down 2.4%. Russell 2000 down 2.2%. Dow Transport slumping 1.6%. And the SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, down now by 3%. Among the names tumbling there, NVIDIA dropping now by 7.6%. 10-year yield 1.97%. Spot gold up 1.6%, $18.99 the ounce. West Texas Intermediate crude oil down 2.2%, $91.62 a barrel. Lots of earnings after the closing bell today. Among some of the names reporting, Roku lower now by 9.3%. Shake Shack, they are down. Shake Shack shares down by 4.4%. And Dropbox lower now by 4.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the cover story of this week's new issue of Bloomberg Business Week is about the pill that's safer than Tylenol, but it is impossible to get to.
Some people might remember over 20 years ago, it was released under the name RU486. And even before that, in France. Joel Weber is editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. This cover story written by Cynthia Coons, U.S. healthcare reporter for Bloomberg News. She joins us on the phone from New Jersey. Joel, I'm going to jump right in. Why is something that's safer than Tylenol so hard to get?
It has been stuck in almost like a regulatory purgatory. And it has been that way actually for decades. And the reason that we want to talk about this story now is obviously there's a big case coming to the Supreme Court. Well, the Supreme Court will decide basically the future of Roe versus Wade. And as that happens, the abortion pill has kind of re-entered the conversation in terms of a potential viable path for women, except that a lot of people don't even know it exists. So how did that happen, Cynthia? And what's the conversation that's starting to happen?
Yeah, I actually was shocked to find out that something like 80% of adults hadn't even heard of the abortion pill. And it actually just shows how powerful these FDA regulations have been. So basically the FDA, they regulate more than 20,000 drugs in America, but on a very, very small group of drugs, something like 60 or 70, a very tiny group. They have these really higher level of restrictions that are meant to prevent really dangerous drugs from getting into the wrong hands. And these are the kind of restrictions that are imposed on drugs that can do anything from just cause serious harm to potentially kill a person. Certain drugs have really big side effects. The abortion pill has always found itself in this class of drugs with the FDA. It started out from when it was approved. It came with all of the restrictions that eventually led it into this sort of highly regulated group of drugs that the FDA has a very close eye on. But oddly, all the research that's been done by doctors, medical bodies, abortion advocates, but ranging down even to the American Medical Association has published a position on this saying this drug is not that dangerous. It's just not. It doesn't send as many women to the hospital as Viagra does, for example, when used by men. It is just not that dangerous. But because it's been kept out of reach, it's been only a certain number of very, very tiny number of doctors are able to prescribe it because doctors have to seek out a certification to prescribe this drug. Therefore, a woman who's at her primary care physician or a young girl who's at her pediatrician, someone who may need this drug, their doctor's not in a position to say, oh, I have this drug, I'll write you a prescription like they might for penicillin. Therefore, people have to be actively going through specified clinics. Everything has to be, it's so highly regulated that it's just generally not been in the public view. And it's increasingly become a problem because as abortion clinics close around the country, as they have been over the past handful of years based on legislative moves by anti-abortion advocates trying to close down clinics, the pill is pretty much the only option for a lot of American women And the question now is, will they be able to get it, and will it be the future of abortion if Roe v. Wade gets overturned?
Cynthia, help me out here. I mean, the one thing that really jumped out for me in your story is you cited Elisa Wells, who co-founded Plan C. It's a site that helps women get abortion pills, and she was working, I guess, on a research project in Ethiopia back in 2014, and she watched a colleague walk into a pharmacy, this is your reporting, no prescription, leave 10 minutes later holding a packet with the abortion bill. So what does it say that we can easily get it in Ethiopia, but we can't in the United States? Is it politics? Is it the medical community? What's holding it back?
That's really interesting. I really couldn't get over that. And she had set out to do that experiment and see whether or not it was easier to get. Because she heard that in many developing nations it was much easier to get. And so she kind of knew that the U.S. had this next level amount of restrictions on the drug, but to see it in practice, I think, was really astounding to her. I think there's a couple things at play here. Surely there's politics involved with abortion. There's no way to pretend there's not. But I think at the end of the day, there's also sort of the issue of when you have restrictions, it's very hard to take them away. It's very hard to prove that something would be safe when you take restrictions away. Like, when I think about it, if a road had a speed limit of 35 miles an hour and you said, no, it could be 50, it would still be safe. It's very easy to lean back on, but it's safe at 35. Let's just keep it there. And I feel like the FDA, to be fair to them, has probably been hanging on to something that they know is safe, and it's very hard to let go. I think what's going to have to happen here, besides the fact that they've already been sued, and even the latest move that they've said in December, it's now going to be legal to mail the abortion pill, though that's going to have to play out because many states have already banned that as well. But I think the next move really has to be either through a lawsuit or the FDA themselves telling these research bodies that are trying to churn out the research to show that all these specific little regulations are unnecessary. Here, this is how to do a study. This is what we want to see. Because the problem is people are producing tons of research for them, and I've seen in their responses, well, it's not a perfect proxy because it doesn't totally answer the question because it sort of needs to be driven by the FDA at this stage, besides the response to a lawsuit, which is the other way that this could actually ultimately get overturned.
Hey, Cynthia, we only have 30 seconds left, but what can you tell us about the company that's behind trying to bring it to the United States?
They're a very secretive, low-profile company. Most pharma companies have sprawling campuses. This company doesn't even publicize its address. They operate with a P.O. box. They're very low profile. That's another issue. I think they were formed in a time when there was a lot of violence in the anti-abortion world, and they were fearful of that, rightfully so, perhaps. That was their decision, and because they've kept a low profile, they also haven't been aggressive in marketing the drug, which is typically how drugs get marketed. So now it's been up to advocates and third parties to basically market this drug, which is not usually what they do.
It just seems like such a logical solution, and it's been out there for a while. It's just unbelievable. Hey, it is the cover of Bloomberg Business Week. Cynthia, thank you so much. Cynthia Coons, U.S. healthcare reporter at Bloomberg News, along with Joel Weber, editor of Bloomberg Business Week, joining us here in our Interactive Broker studio.
February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 17th, here's Bloomberg's Renita Young.
On this day in Black history in 1891, Albert Richardson patented the butter churn. Up until then, anyone who wanted butter had to make it by hand in a bowl. But Richardson's invention would eventually make it easier to make butter and forever change the food industry. Throughout his life, Richardson had a habit of seeing a problem and then inventing a solution. One such problem he saw was the way dead people were buried. At the time, it was in shallow graves or lowering caskets with ropes into a deeper hole. And this required several people to work in unison, which wasn't always possible, and it could result in damaging the casket. So in 1894, Richardson patented the casket lowering device, and it's used in all cemeteries today. Richardson also invented the home fastener, an insect destroyer, and an improved design of the bottle. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today's installment of Today in Black History.
All right, folks, we're going to just in a minute or so join our TV colleagues. We're going to talk about the markets. Here we've got stocks pretty much hovering at their lows. You are listening to Bloomberg Business Week. And coming up, countdown to the close in just a moment.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues, Carol Massa, Tim Stenovic, as we welcome across TV, radio, YouTube to discuss, well, the sell-off to the tune of 2.4% on the NASDAQ, but only the worst day since February the 11th, which kind of speaks to the volatility we have in these markets.
I feel better.
Perspective. I've been focusing on the home builder stocks. They're down about 2.5%. We got some housing start data that was a little bit disappointing. I mean, this group has been in a lot of pressures over the last couple of months, but again, kind of down in the overall move to the downside here, Tim.
Yeah, speaking of groups under pressure, semis today, the SOX, Philadelphia Semiconductor Index, certainly under pressure. Every single component in there, all 30 of them, lower on the day today.
It's worth pointing out volumes are, though, somewhat muted compared to your 20-day average. I mean, off by about 18% on the S&P, but so too is the S&P, off by 82 points. Let's go through the numbers. We're off by 1.8% on the S&P at the moment. The Dow Jones also off by 1.6%. That's 552 points to the downside. But once again, big tech feeling the most pain, down by 2.5%, 346 points lower as big tech pain trade from yields going higher, and Russell 2000 also off by 2.3.
That's really where we start. When we take a look at the sector level of where we are in the S&P 500, it is technology that is clearly the worst performer. Communications off 2.4% and the tech index off 2.6%. Financials are also lower because you are getting yields really coming in on this overall safe haven bid that Caroline mentioned. And there is a hint of defensiveness, Romain. Utilities are one sector in the green. You're up 0.2%. Those typically do well when yields fall. And of course, staples as well. You're still up about 1% on the day.
Yeah, and when you talk about tech and you talk about the Philadelphia Semiconductor Index, the biggest drag in that index is NVIDIA. Those shares down more than 7% here on the day after those earnings, which showed a pretty consistent growth here, but not enough growth to satisfy investors. And of course, the walking away from that ARM deal maybe raising some concerns about what the next long-term plan is going to be for this company. Also to the downside, keep an eye on Albemarle, of course, the biggest lithium producer out there. The shares right now down almost 19% here on the day. This also, of course, after earnings, but more importantly, the guidance, which was really weak. Remember, lithium prices have been through the roof, so Albemarle should be benefiting from this, and they have. But again, investor expectations a little high here. We should point out Walmart, one of the more notable gainers here on the day, up about 4%, and Hasbro shares up about 2% here. This on the back of news that an activist investor, Alta Fox, has been looking to shake up the board and, more importantly, get that company to spin off some of its gaming business.
Those activists, they're busy right now. Let's have a quick look, as also on the busy side is gold. And to context, this is actually, well, an area that's having its best day in at 1.2 months, but at the moment having its strongest day since January the 19th. In your yellow chart for my radio audience, we're going to paint the picture for you. Physical gold shining. What's not got such, it's lacking some luster. Is digital gold, Romain.
Oh, this is digital
crypto not having a good day.
Over,
yeah, you
over
like what I did
physical
there?
gold?
Yeah.
I like that.
And so seemingly they're certainly not moving in lockstep. We have one risk asset and one haven trade there for you.
All right. It's a great chart, though. Also, let's not forget inflation. 1 week from now, we're going to get those core PCE numbers, so we'll be talking about it big time. Goldman Sachs Chairman and CEO David Solomon was at a Credit Suisse event. He was talking about it. He's got some concerns in terms of what it does to growth longer term. Check it out.
Inflation has the risk of being a real headwind to growth. And so I think one of the uncertainties that no one can know is how are we going to navigate from a monetary policy perspective to kind of navigate and rebalance, an inflation. That's an unknown. If we really screw it up, I don't mean we, if the world really screws it up, it's going to be a headwind to growth and there'll be a consequence to that.
All right, again, David Solomon of Goldman Sachs at the Credit Suisse Financial Services Forum. I mean, screwing it up. I mean, there are so many questions out there, Romain, right, in terms of whether or not the Fed gets policy right. There's too many questions about understanding really what happens long term and when things correct. And then you throw the geopolitical, concerns and nervousness on top of it. Yeah. We still don't know how this will play out ultimately.
And I think it's interesting, too, because it felt like the market, at least thought that it had it right on what the Fed may or may not do just a week or so ago. And then, of course, now with Russia, Ukraine, you kind of have to factor that in and some commentary even by some Fed members that, well, maybe they're not going to be as aggressive as some people thought they would be at that March meeting. Who knows?
Well, if they're not as aggressive, then what does that mean for inflation?
It means inflation goes higher.
Exactly. And what does that mean for the purchasing power of the American consumer? It continues to go down.
Good thing we're still buying bonds,
real issue. What's that? What is
Good
that,
thing
Taylor?
We're still buying bonds.
Oh, I knew you were going to say that.
Just your daily reminder.
Until when, though? Until when?
Mid-March.
Okay.
Another, 30 more days of
30
this,
more
yeah.
days of Taylor. We'll have a montage of this, Taylor.
But Taylor, you were pointing out a great note a little bit earlier coming out of Credit Suisse, though, really calling for some sort of Volcker volatility here, talking about how you have to upend this market, how you really need to pop some of these asset bubbles. I mean, here speaks Goldman Sachs CEO, who's got an above-inflation paycheck, I think, of late. But these are the asset bubbles that they've been talking about in terms of whether it be crypto, whether it be your overall, the wealth factor here, that in some ways is meaning that if you slam on the brakes just to cool down those asset prices, well, then you slow down the entire economy, and that hurts the lowest income of them all the most.
We've really had some big conversations here about the front loading, if you will, of all of these rate hikes in the first half, and I guess sort of the long-term implications of that, Romaine, which we don't have time to discuss on this program. But if inflation risks are to the upside, which is what we got in the meeting minutes yesterday, wouldn't you have to be front-loading some of these rate hikes?
I think so. And I mean, to Caroline's point, I mean, she was referring, I believe, to Zoltan Posnar, who was over at Credit Suisse, who was on the Odd Lots podcast that Joe Weisenthal and Tracy Alloway host. And it's interesting because the idea that you need a Volcker kind of moment, I mean, that might be a little bit overstated, but he kind of makes the case that you can have a Volcker-type moment without necessarily crashing the economy. The idea that it might actually rein in some of the shelter costs and some of the real sort of pain points, and at the same time still allow economic activity to thrive.
And force people back to work, perhaps. I mean, he's trying to use an association with what happened in Hungary in his past, but the fact that people have made, perhaps on the younger end, a load of money through some investments, on the older end, decide to retire that much earlier. What do we do then with this labor shortage, which every company is speaking about at the moment?
Well, speaking of asset prices, you guys saw the news earlier today that mortgage rates have surged to the highest point since May of 2019, 3.92%. My question is, what does that do to home prices? Does that cause home prices to finally start to cool? Or does it make it more difficult for first-time potential homeowners to actually get into the housing market because those monthly payments are going to be higher because of those higher interest rates?
I guess it depends on who's been buying those houses. I mean, a percentage
a lot of
point,
investors, unfortunately.
But if you're an individual, a percentage point increase in a rate, that's huge when you translate that into a monthly payment.
All right, we'll continue in less than an hour's time. We'll have Beyond the Bell, our cross-platform coverage on TV, radio, and YouTube. We'll count you down to the close on this Thursday.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we are hovering near our lows of the session. I mean, it's funny to just kind of listen to our conversation. I think we don't know, and I think there's a really big chance that there is a policy mistake. I mean, if at some point those higher prices prevent people from buying things, at some point the housing market, it'll be too expensive for people to buy. Mortgage rates will make that happen. You know what I mean? Like at some point,
let's play that out. So does that mean, okay, so there's been a problem with supply and demand here, right? Demand is absolutely exceeding supply. It's been especially difficult for first-time home buyers to get in because the price of homes around the country have gone up, especially in places like the Sun Belt where a lot of people are moving. If mortgage rates go up, like Romaine said, for each percentage point, there's a significant increase in how much that costs somebody per month.
Right.
But does that at the same time mean that those people who are selling those homes have to lower the prices?
Yes.
Because what that monthly fee was for that mortgage, it's the same for a more expensive home than it was earlier because the mortgage rate has gone up. So what you're paying for, let's say, $1 million home each month is higher, now than it was a year ago. So the price of that home would have to go down for it to find a buyer.
Right. So the market starts to correct.
But do people then not sell?
Maybe, and people stay in those homes.
Exactly.
But there's a cycle because you buy a home too, right? We talk about it, then you buy a bunch of stuff to go into it. There's just a certain amount of activity, right? Momentum that comes along with it. I don't know, maybe just as a student of economics, I guess I believe that this is going to right itself, that there's some extraordinary things that have happened in the last couple of years that have skewed it. And I just still don't know. And if we're still talking about this in 6 months from now, then there's something that has fundamentally changed when it comes to supply demand. And same thing with the labor market. Maybe it really does mean that there's not as many people who are going to come back to the labor market.
I feel for Jay Powell. It's a tough job.
It is. It's not exact in terms of this science. There's a lot of nuance. All right, let's get back to world and national news. Speaking of nuance, dealing with so many world and national events, here is Nancy Lyons.
Thanks, Carol. The U.S. does not want to start a war. Rather, it wants to prevent one. Those are the words of Secretary of State Antony Blinken, who addressed the UN Security Council today on the situation in Ukraine.
This is a moment of peril for the lives and safety of millions of people, as well as for the foundation of the United Nations Charter and the rules-based international order that preserves stability worldwide.
Blinken told the UN Security Council that this crisis directly affects every member and every country in the world. A New York judge says former President Donald Trump and two of his adult children must testify in New York Attorney General Letitia James' civil probe of the Trump Organization. Attorneys for the Trumps had accused James of improperly trying to gather criminal evidence under the guise of a civil probe into asset valuations at the company. President Biden says the government is launching a major effort to clean up the Great Lakes region, covering environmentally degraded sites in 6 states. It includes restoring wetlands, improving drinking water, and creating jobs in the process.
We're announcing an investment of $1 billion. $1 billion from the bipartisan infrastructure bill. It's going to allow the most significant restoration of the Great Lakes in the history of the Great Lakes.
Biden says there's been plenty of talk over the decades, but little progress. He says that changes today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts and more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. This headline just crossed the Bloomberg terminal. We just want to play around a little bit with it and give you a little bit more information. Former President Donald Trump and two of his adult children must testify in New York Attorney General Letitia James' civil probe of the Trump Organization, a state judge just ruling that.
Yeah, New York State Judge Arthur Engoron on Thursday rejecting a request by Trump, Donald Trump Jr. and Ivanka Trump that he blocked James's subpoenas for their deposition. At a contentious hearing earlier in the day, lawyers for the Trumps accused James of improperly trying to gather criminal evidence under the guise of conducting a civil investigation.
This has been going on for some time. James has been investigating potentially fraudulent asset valuations at the Trump Organization, while Manhattan District Attorney Alvin Bragg is leading a separate criminal case against the company and its longtime chief financial officer for alleged tax fraud. A lawyer for the Trump children said James was, quote, essentially standing in the shoes of Bragg in seeking to question the Trumps. But this has to do with valuations of properties when it comes to, I think, accessing loans, right?
Yeah.
And then what the value is when it comes to paying taxes on them.
Exactly. James's investigation began back in 2019. It was started after former President Trump's former lawyer and fixer Michael Cohen handed Congress a trove of Trump financial records and testified that his former boss, quote, inflated his total assets when it served his purposes and, quote, deflated his assets to reduce his real estate taxes.
Yeah. So this is, you have a value on something. That value applies whatever you do, whether it's accessing loans on that property or whether it is paying taxes. You can't kind of change the valuations of it.
Okay, so let's talk implications of this.
Yeah.
Here we are in a year where there are midterm elections. Does it matter for the Republican Party? We don't know if President Trump is going to run again in 2024.
Does it rally Republicans behind them
exactly.
who feel that their former president is maybe being unfairly targeted, right?
It's a good question.
Right. And so this is why it is going to be an interesting political year, these midterms, and we'll watch it because it will say something about how Americans feel.
Or do Americans care more about inflation than anything else?
I don't know. It used to be your money in your pocketbook.
Well,
it's the economy stupid. It used to be.
Yeah,
but
I've heard that before, Carol.
It's not so clear. All right. You're listening to Bloomberg Radio.
is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pelliffus. Selling is intensifying. 43 minutes to go ahead of the closing bell, with the S&P now down by 2.1%. Lots going on. A down day, that's the bottom line. But right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are plunging today amid Ukraine tensions. Biden said the probability of invasion is very high. Dow's currently down 650 points. S&P's dropped 94, while the NASDAQ is off by 388. The U.S. 10-year yield falls to 1.97%. Gold is up 28. Oil is down. And Bitcoin is sinking by 7%. Among the main 11 S&P sectors, only utilities and consumer staples were in the green, and leaders to the upside in the Dow, Walmart and Cisco after earnings, while Salesforce and Caterpillar led to the downside. In other news, Bullard says that we may have to go beyond the neutral rate to control prices. And wrapping things up, Redfin, Roku, and Shake Shack all report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. So a broad market sell-off right now. To hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been watching a lot of the markets. Just want to point out that we are going to new lows here on those major equity averages. In fact, right now down about 2.7% on the NASDAQ, as Charlie mentioned, 2% down on the S&P, and the Dow down about 1.8%. So as Charlie mentioned, that selling intensifying. And we've also seen some pressure when it comes to the oil market as well.
Yeah, that's right. We're actually seeing West Texas Intermediate down $2 right now.
Yeah, down about 2.2%.
Yeah, interestingly enough. Hey, we got a really special guest with us today. Mike McGlone is Senior Commodity Strategist at Bloomberg Intelligence. It is, I say special because he's with us in the Bloomberg Interactive Broker studio from Miami, where he is now based these days. Mike, I want to start with oil and then, of course, talk crypto with you as well. Help us understand the oil move that we're seeing today, because if tensions do, and as they have been, rising on the border of Russia and Ukraine, shouldn't we see that reflected in higher oil prices?
Yes, I think oil is doing a 2008. It went up on the escalator and down on the elevator. So we have to worry about that. So right now, it's got a very significant reason to be high. A potential war with one of the largest crude oil exporters in the world against one of the largest grain exporters in the world. But it can only go so far. You get leveraged positions and you pull back. I think we're just seeing some of that today. But if this armed conflict happens, crude oil can easily jump well over $100, but I think that will be the beginning of its end and its demise, because that will kick into a recession. It's like a repeat of 2008. That's my prediction, but it's just pulling back a little bit.
Well, that's what, I mean, how do we incorporate crude as an indicator of inflation?
Well, it's look at 2008. Crude oil peaked at $145 a barrel in July, and that was right before everything collapsed. So it is one of the prime indicators, but the juxtaposition of what's happened versus then and now is unique. Back then, U.S. had a property crisis, and we were the largest net importer. Who's doing that now? China is having a property crisis and is the world's largest net importer, and we're a net exporter. So